Here on set at CNBC headquarters, not the Meadowlands, JB Mackenzie is Vice President and General Manager of Futures and Prediction Markets at Robinhood. It's great to see you. This is a very busy time for all of these new spaces. I just heard about Perpetual futures. We'll get to that in a second. From a prediction markets point of view, how is this going to evolve with regulators now coming out and saying perhaps we're going to narrow the scope of what you're allowed to bet on when it comes to sports?
Well, I think it's interesting. This is sort of a natural evolution, I would say, for the overall marketplace. If you go back almost 12 months ago, many of these markets didn't exist and the players of the markets didn't exist. And so I think what you're really starting to see is that when you can create a great marketplace, which prediction markets do, especially on the sports side, it generates interest from customers to come through and participate in those markets. We've also seen that, some of the traditional gaming firms out there like Hard Rock and MGM say, well, it's not impacting it, which means there's new customers coming into that marketplace. And so, again, I think for what it does more than anything else is it's a new opportunity and avenue for people to get transparent pricing, to access markets where they can get in and out of markets in real time.
Kalshi, as Contessa just mentioned, has maybe grown its market share up to 57%. What's Robinhood's response to that, plan for that? How do you differentiate yourself when there's so many people trying to get into this space?
Well, that's, I think, the interesting part, right? So at Robinhood, we use multiple venues to place our trades. So our customers can go to Kalshi or to Rothera, the exchange that we have a joint venture with Susquehanna, as well as with ForecastX. So what we do is we look to see who has the best contracts that are out there from a liquidity standpoint, a clarification of how they're resolved. There's an integrity conversation that has to happen there as well. And then we look at pricing. And so what we do is we take all those things together and then we dictate to sort of where those customers should send those trades. I think what we've been able to do is we've been able to identify the right place to put trades. We started off with the presidential election contract over 12 months ago, and we've moved from other exchanges. We've added Kalshi. Now we have 3. So at the end of the day, we're going to give the best experience to our clients from a product, a price, and an overall access point that we think is going to be, unbeatable.
You do also manage futures. I want you to hear what Kalshi's CEO had to say last night, talking about this new product. His company's move into perpetual futures contracts, which they're called. Let's take a listen.
They've grown dramatically, and they're doing $90 trillion of volume now. So the demand is clearly there, and the question is why. The main thing, like the way that perpetual futures are different from futures, is that they don't expire. And so they're simpler for a retail participant and institutions. At the end of the day, they're simpler, they're cheaper, and they're more accessible for consumers.
They're also, aren't they leveraged positions, though, in some way?
They are. They are in many cases, and these are international right now. I mean, obviously, they're coming to the United States, but they do have a higher leverage, which means less money up front for you to take positions. I think perpetual futures are a very interesting evolution in the marketplace, and I think that there is probably a place for them. I think what you're hearing from people like the CME is they want some clarity on some of the rules and not just no action letters. I think what we look at it as is it's a great opportunity to pair our existing offering in something like our crypto product that trades 24 hours, 7 days a week. Now our futures products that are trading 24 hours, 7 days a week, and then adding in the perpetual products as another asset class to join those.
Yeah, I've heard crypto being more of a use case. It's hard to go get the wallet and do these traditional things. So this was kind of a quicker, a more convenient way to access them. Do we need it for equities?
Well, it'd be interesting to see. I think right now equities, they're not even trading 24 hours a day. I mean, they are 24 to 7 or 5. They're not trading options. But I think as that market evolves, I think there will be interest to say, can you have access to products such as this? But remember, equities don't expire, right? So for your ability to do it, you can buy Apple stock and you own it for as long as you want to own it. For the futures products, they have expirations. That's where it varies a little bit. So there's a transaction cost that comes to it. And also differentiations between deliveries for certain physically settled commodities.
There has been